So how do you assess the coronavirus and its impacts on it's a big topic. It's a big question to say, how do you assess it on the global economy? But what can you get into the specifics about it?
Well, firstly, I do want to underline that I'm not laughing at this. People are dying of this virus, coronavirus, or COVID-19, as we're supposed to call it now. It's killing people. So we don't want to. I don't want to talk about the mortality rates, and obviously that's a very serious issue. But when we're looking at the economic impact, we have to start taking this very seriously, because it's not something that's going to just affect the short term. We are going to see the effects of the coronavirus economically impacting on our economy, on the global economy, not just in the short term, but in the medium and long term as well. Just today, for example, on the news from the latest news coming out of China, in the sudden jump in not just reported cases of coronavirus, but in the deaths from coronavirus, that has sent the FTSE into shock. It's sent the global markets into shock, but the FTSE opened 65 points lower this morning because of trading on the Asian markets. But why was that? Because China has come out with yet more data and changed the way in which it is actually now diagnosing the diagnostic tests for coronavirus. The impact of that has had shock waves across the global markets, not just China. And this is what I think people have to comprehend, that there is no such thing as a closed market anymore. Something will happen in one country will have an impact on not on the global economy and on our own home economy.
They're very connected.
Everything's connected. Exactly. The globalization, there you go. Everything is connected. And the long-term effect of coronavirus is... It's too early at this moment to be able to actually put a financial cost on it. We are seeing figures coming out, and certainly, as I said, I don't want to downplay the fact that people have died from it, but from an economic point of view, we're looking at just in this first quarter, probably some of the figures I've seen are looking at a 2 percentage point drop in growth in the Chinese market, in the Chinese economy. That's equivalent of a $62.8 million loss in growth.
Billion or million?
Sorry, billion.
Billion.
62. So that's a serious slice of growth. So this is just on the Chinese economy. The Chinese economy was already in a fluctuating state. It can't afford to keep this long term. We saw already the impact of the trade war with the US. So China's had a number of problems. The impact of that worldwide is something that we can't yet fully measure financially. So the fact that Tesla closed its factory, I mean, not just Tesla, a number of companies have closed their factories in China. Be it a temporary closure, it has an economic cost. Apple suffered its supply chain to be cut off from Wuhan.
Mitsubishi also stopped part of their production in China. They had to factories are closing.
But this is the point, what I'm saying. The multinationals, China went from being quite a closed environment, a closed economy, to having, over time, has developed cross-border links, and certainly the multinationals have moved into the Chinese market. So we're not just in the automotive industry, but in pharmaceuticals, in biotech. And of course, the fact that now China is once again closed off to us, albeit we don't know for how long even, is going to have a long-term economic impact, because we're not just disrupting supply chains, we're looking at actual impact to companies in their balance sheets. Right. Sorry, so we're about to say.
I was going to say, in terms of, these are big conglomerates, they move a lot slower than sort of an agile family office. Do you think family office interests, they can move more faster, more quickly? They are more flexible in pulling out their money? Are they more liquid than other kinds of entities?
Well, certainly we have seen on the worrying front, people because family offices are concerned with what is going on in the global economy. We have seen an awful lot of stockpiling of cash. in a way that they are looking for the next big opportunity to invest. They haven't found it yet, and certainly that trend is continuing, the stockpiling of cash, which is a worry. It is a concern. But as I said, this coronavirus, the long-term impact, we can't yet actually fully measure it financially. But I mean, just to say, look at OPEC slashing its forecast for global oil demand. Germany, the impact on the German economy, which is already going into a technical recession. We're seeing a 0.2 percentage points off German GDP for the 3 months up to March. That could push it into a technical recession. Again, and as we were discussing earlier, with the news coming out of the European Union, as in from the UK leaving, who's going to pick up the tab of basically contributions, Germany will have a higher contribution as it goes into technical recession. Not a good place to be.
Not a good place to be. You're right there.
These are all it's because coronavirus is, yes, we're looking at the long-term economic impact, but it's and it will have certainly an impact, but it's one thing of many events that could possibly impact on the global economy. You can't just segregate everything into little boxes. You have to look at the whole picture. And it is a serious concern.
And are some family offices from different parts of the world doing better than others in anticipating and maybe keeping their money safer? Perhaps maybe Asian family offices, because they're in the mix, they can see it better as opposed to maybe Western family offices, and they're making better decisions?
No, I wouldn't say that's that at all. I think the family offices that will survive the best are those that move quickest, have a much better strategy in terms of looking at global risk and seeing that, because up to a certain point, what we've been seeing is that risk analysis has been attached to individual investments rather than having an overall strategy and an overall understanding of the global economy and the risks that it faces. They have attached risk strategy to each individual investment. So they haven't been able to piece the whole picture together. Family offices that have had that overall strategy, that have seen this problem arising, will move quicker and be able to adjust quicker. I don't think necessarily that family offices move quicker than multinationals. No? I think multinationals have moved quite quickly to try and stem the economic possible crisis that will come out of this virus and the spread of it. But as we've seen, the main problem with it has also been the fact that people have very little understanding of, or rather faith in the information that's coming out from the Chinese government. People are naturally mistrusting what has been said because China has been very reticent in giving out information. And now suddenly we have this news that where we thought it was plateauing and the number of cases was actually plateauing, suddenly we've had a huge hike. And suddenly they're changing how they're diagnosing coronavirus. And so that's caused a panic. And yet again, people are feeling that mistrust towards the so-called official information coming out of China. And that will have a long-term impact also on whether or not companies again look to China for investment as a potential area of investment, as a marketplace, because once again, that mistrust enters the marketplace, which is worrying.
Well, China has made it very difficult for Western companies to really penetrate the market anyway. You know, the issues with IP as well.
Yes.
And just a lack of integration into the Chinese market.
Yes.
So why would this make it any different?
Well,
China's very defensive in the first place.
The Chinese
Square that circle for me.
So, square the circle. The Chinese government certainly has been very reticent in, and it's it has been a closed market. But we have seen in the last few years, China coming forward as a place of investment, regardless of the problems with, shall we say, the closed type of government, the fact it's a communist regime. We have seen an opening up of China, which is why we've seen a huge amount of multinationals from high-scale luxury retailers, automotive industry, pharmaceuticals, as I mentioned, biotech. They're all manufacturing within the Chinese market. And that factor that now we have basically closed China off again because, as you've seen, we're no longer flying to China. The major airliners have stopped contact with China. So we've basically closed the door once again. It's going to be quite hard when those doors reopen for even business faith to come back, because I think, yes, because it takes time to build relationships. And certainly in China, it's taken time to build relationships. And it's going to have quite a negative impact because of the way it's been handled, I think, by the Chinese government. And that mistrust is creeping back in again.